I am very pleased to be presenting the webinar on the European Long-Term Investment Fund and specifically how it benefits private credit. I am joined today by Connor Blake, my colleague who heads up our office in Ireland and is our head of capital markets and treasury. He'll take a moment to introduce himself here in a moment. Also, I am joined by Niall Crowley, a consultant with William Fry, who will be our head presenter today on the ELTIF structures. More than 130 ELTIFs have already been established, and there are even more pending. So there's a lot of exciting stuff to learn today that Niall will be presenting. Niall is with William Fry, and I'd like to take a moment to congratulate them. They just won the ELTIF 2024 Law Firm of the Year Award. So some very exciting stuff, and Niall will take a moment to introduce himself, but right now I'm going to pass it to Connor Blake. So Connor, take it away.
Hi everybody, and thanks for that, Shayla. I'm Connor Blake. I recently joined Centralis, but with over 20 years experience primarily in the corporate services, SPV administration space, as well as then Irish funds. So I head up the Centralis Ireland team here, as well as the kind of divisional line of capital markets and treasury. We'll touch more on those services at the very end. So for now, I'll hand over to Niall, please, to take us through the ELTIF landscape. Thank you.
Thanks, Connor. Hello, everyone. My name is Niall Crowley. I'm a consultant here in William Fry, working in our asset management and investment funds practice. So I've over 20 years experience in private funds with a particular focus on private credit funds and property funds. So with that, we can start into the presentation. And I suppose the first question that we ask, I guess, is what is an ELTIF? And so if we can move to the first slide, Celia. So it's a regulated fund structure introduced by the EU to encourage long-term investment into the EU economy. And it's important to remember, I suppose, from the start that there's a single rule book for ELTIFs that applies regardless of what jurisdiction the ELTIF is domiciled in. Therefore, a fund sponsor can choose to establish an ELTIF in whatever EU jurisdiction it wishes, and the same rules will apply. So the ELTIF is specifically designed to boost investment in private market assets, such as private credit and infrastructure. And just an important point to note is that an ELTIF can invest in assets based anywhere in the world, provided the investment benefits the EU economy. From a US perspective, US fund sponsors that have already established private credit ELTIFs include Goldman Sachs, Bain Capital, BlackRock, PGIM, and Fidelity. So already a lot of interest in the product. A lot of US fund sponsors have already made the jump to establish private credit ELTIFs. So we can move to the next slide then. In terms of the structure that is typically used for an ELTIF, an ELTIF can be set up as a trust, a limited partnership, or a corporate entity. And it's also possible, of course, to have master feeder ELTIFs and ELTIF fund of funds. So an ELTIF can be established as a standalone fund or as a sub-fund of an existing umbrella fund. So when established as a sub-fund of an existing umbrella, there will be segregated liability between the particular sub-fund within the umbrella. And if an ELTIF is established as a sub-fund of a professional investor fund in Ireland, it can actually be established very quickly, as we have a 24-hour fund authorization process in Ireland. And by contrast, a retail investor ELTIF, so an ELTIF that's marketed to retail investors, is subject to a central bank authorization process, which is newly established. And the authorization process primarily is comprised of a review by the central bank of a draft offering document for the ELTIF. And once the central bank is satisfied with the offering document, then an application for authorization of the ELTIF can be made. And the application will be processed on a 24-hour basis once the offering document is cleared of comment by the central bank. So another, I suppose, point of flexibility around ELTIFs is that they can be open-ended, closed-ended, or a hybrid. For an open-ended ELTIF, there is, I suppose, an additional level of regulation around redemption and liquidity. And an open-ended ELTIF, for instance, must retain a certain percentage of liquid assets, such as listed equities, and redemptions are limited to a maximum percentage of those assets, and that maximum percentage is determined by reference to the redemption notice period of the ELTIF. So we can move on then just to an overview of the recent reforms to the ELTIF. So prior to these reforms, the ELTIF had only limited take-up. So the ELTIF was originally introduced many years ago in the EU, but the original ELTIF regulations made the product cumbersome to distribute and operate. However, a number of important enhancements have been made over the course of this year, in fact. And the enhancements have been made under what's called colloquially the ELTIF 2.0 regulation, and also under an ELTIF RTS. And the initial draft ELTIF RTS were issued in July, and since then over 100 ELTIFs have been established. So significant product growth since the draft RTS, or regulatory technical standards, were published, and those regulatory technical standards were finalised in October of this year. So I guess moving on to the key reforms. The first is that, sorry, we can just go back a slide there, Sila. So the first is that ELTIFs may now be established as loan originating funds, subject to a 20% issuer concentration limit for ELTIFs that are marketed to retail investors, but there's no concentration limit for ELTIFs that are marketed to professional investors. One point to note, just in terms of loans granted by an ELTIF, is that the maturity of the loan can't exceed the life or the term of the ELTIF. So ELTIFs may lend to any EU or non-EU business which is unlisted or listed with a market cap of less than 1.5 billion euros. And in an Irish context, what's really significant is that ELTIFs are exempt from the Central Bank of Ireland's loan originating fund rules. Now, those rules are quite onerous and give rise to very high compliance costs. And it's noteworthy that PGIM and Bain have both established private credit ELTIFs in Ireland because of the fact that ELTIFs are exempt from the loan originating fund rules. And the ELTIFs that have been established in Ireland, it's worth noting, are both closed-ended and reserved to professional investors. So then the second set of key ELTIF reforms, I suppose the first being that leverage can be used to finance loans originated by an ELTIF. And in terms of the conditions around that leverage, for a retail investor ELTIF, the leverage is limited to 50% of the retail investor ELTIF's net assets. And for a professional investor ELTIF, the borrowing is limited to 100% of net assets. The limits only kick in 3 years after the date on which the ELTIF is first marketed to investors. So there's quite a lot of, I suppose, leeway given during the ramp-up period, and such that there's quite an amount of time for the borrowing limits to be complied with. A couple of further points just around leverage. Firstly, that borrowing backed by uncalled commitments is not considered to be leverage, and also that an ELTIF may encumber its own assets to implement its borrowing strategy, and that there's no maximum level of security pledge or other guarantee which may be granted over an ELTIF's assets. So a lot of flexibility there. The reformed ELTIF can invest in loans, other private credit funds, green bonds, and securitized assets. And I guess then the last key reform would be that a distinction has been made in ELTIF 2.0 and in the regulatory technical standards between professional investor ELTIFs and ELTIFs that are marketed to retail investors. And I guess the key distinction there is that there's relatively few portfolio diversification and concentration rules applicable to professional investor ELTIFs. So I guess, again, a lot more flexibility in terms of investment strategies that can be pursued, particularly private credit strategies that can be pursued by professional investor ELTIFs as compared to retail investor ELTIFs. So we'll move on then just to spell out the benefits of the ELTIF for private credit strategies. So I guess one of the key benefits is that the ELTIF allows for a diversified portfolio, thereby reducing risk by spreading investments across various private credit opportunities. So an ELTIF can be established as an open-ended, closed-ended or hybrid structure with a multi-credit approach that provides access to the broad range of options within the private credit universe. So everything from private corporate lending to real estate lending. And we will get to, I guess, to flesh out the entirety of the investable universe of a private credit ELTIF later in the webinar. I guess the second key point is that ELTIFs now have a broader investor base as they're accessible to both retail and professional investors. And this is hoped to democratize access to private credit markets. Indeed, BlackRock, amongst other asset managers, believe that ELTIF will become the preferred vehicle for the retail distribution of private funds. And it's important to note that the retail investors that we refer to here include sophisticated retail investors such as family offices and high net worth individuals, and that it is, I suppose, in broad terms, it's much easier for a retail investor to invest in the ELTIF with the ELTIF 2.0 reforms having taken effect. For example, there's no longer a minimum investment requirement or a requirement that retail investors receive investment advice prior to investing in an ELTIF. Another key benefit is linked to the broader investor base, and that's just the distribution opportunities that the ELTIF provides. It's really the only scalable vehicle capable of distributing private funds to retail investors across borders within the EU. Without the ELTIF marketing to sophisticated retail investors is only possible where permitted by individual member states. And it's also subject to individual member states' private placement regimes, which can be quite onerous. So we'll just move on then to the next set of benefits. So the first being that ELTIFs are designed for long-term investment, hence the name, and so they align well with the nature of private credit. ELTIFs will offer ease of access to the burgeoning European private credit market. And also certain EU countries such as Italy offer favourable tax treatment to an investment in an ELTIF, thus enhancing the marketability of the ELTIF, particularly to retail investors. So then I'll just move on to run through a case study of an existing ELTIF established as a private credit fund. And this particular ELTIF is an evergreen or open-ended fund. It allows for monthly subscriptions with a 10 business days notice period and quarterly redemptions with a quarterly notice period. You'll see there that the minimum initial investment per investor is €1,000. So it's at an access point that's, at a price point that makes it accessible to ordinary retail investors. So this particular ELTIF invests in infrastructure debt, real estate debt, loans to small and medium-sized companies, and corporate loans of different seniorities. And the ELTIF also invests in a combination of euro high yield credit and asset-backed securities. And that just goes to that requirement that highly liquid assets are held. So when establishing in Europe, it's important to partner, to ensure compliance with the ELTIF 2.0 regulation and the regulatory technical standards. And in particular, it's important to, and we can move on to the next slide, it's important to be mindful of the regulatory framework, which requires, amongst other things, in ELTIF to have a redemption policy and liquidity management framework, and to carry out regular stress tests to ensure redemption requests can be met. And each ELTIF must appoint an alternative investment fund manager, or AIFM, and the AIFM is a creature of EU regulation. It's responsible, I suppose, it has ultimate responsibility for any alternative investment fund that it manages, and thus it has ultimate responsibility for complying with the regulatory framework that applies to ELTIFs. And so it's important that a fund sponsor partners with a reputable and experienced EU-based AIFM. So the fund sponsor and the fund manager should really engage with the AIFM on a continuous basis to ensure that they're fully aware of and compliant with the then current regulatory environment. Just talk now a bit about the European private credit market, because there is a lot of commentary about how Europe needs to catch up with the US in terms of allocation of capital to private credit markets. And it does, European private credit market does present an opportunity to investors to take advantage of potentially higher returns compared to the US market. Bank lending in Europe has begun to retrench due to ever more stringent regulatory requirements around, for example, the capital adequacy of banks. And so the business ecosystem is therefore primed for private lenders to step in. And of course, that trend of I suppose, banks retrenching is already well underway in the US. But there's lots of growth potential apparent in the EU, and in particular, it's worth noting that delivered performance in Europe has overshot the US over multiple time periods, 2023 included. And then finally, one other thing that kind of means that there's definite growth potential in the European private credit market is that there's an emerging trend of European companies staying private for longer than is the historical norm. So with that, we can close that section of the webinar. A Q&A will follow, but I'll leave it to Celia now just to run through the Centralis product offering.
Niall, thank you so much for all that wonderful information. And we do look forward to receiving some questions. We have plenty of time, so at any point, just type into the chat your question and we will take them in as they come. And as you're typing in your questions, I will just take this moment to introduce Centralis. We are headquartered in Luxembourg. We have global offices around the world. We provide business support services to corporate organizations, also to alternative asset managers. We do all the complex operational work that, sometimes larger fund administrators and corporate service providers don't want to do. Treasury is one of those. So we will often provide experts to help with setting up a treasury management system, providing netting and hedging, loan administration, cash management, accounts receivable and accounts payable, and it's quite a flexible offering, and that's one area where we are truly unique. We also support global regulatory compliance, and you can see here all the different types of filings that we can manage for our clients. And then last but not least, we do provide corporate compliance services. Normally, it's establishing a special purpose vehicle, providing the incorporation, substance, directors, ongoing corporate secretarial support and board meetings, and payroll as well. And here you can see our global offices. So I think with that, we have some questions coming in, and so I'll pass it to Connor.
Yeah, thanks, Jayla. Thanks, Niall. Just while questions are coming in, I might start off with a couple of questions, please, Niall, if I can. So, first one being, are ELTIFs proven to be more popular with retail or institutional investors at this time?
Oh, Niall, you're on mute.
Sorry, guys. So ELTIFs are definitely more popular than with institutional investors than retail investors. And so the institutional investors would typically be insurers and banks. And they found ELTIFs attractive due to their alignment with the MiFID II distribution arrangements, and also because ELTIFs are typically more liquid and offer more liquidity than ordinary, I suppose, existing private credit funds. But I think there is quite a bit of expectation that the market will evolve so that over time retail investors become more open, become more educated to become more open to investing in ELTIFs, but become more educated also around the nature just of open-ended funds, closed-ended funds, hybrid funds. And also there is, of course, the reality that the reformed ELTIF is much more marketable because there's no minimum investment requirement. So somebody in theory could invest to as little as 100-200 euros in an ELTIF. We see for retail investor ELTIFs that the minimum investment is settling anywhere between 1,000 and 5,000 euros. So that seems to be the trend. But in terms of how private credit managers are approaching retail investors, and again to note that term retail investors includes your high net worth individuals and your family offices. So private credit managers are opting to use investment platforms such as Moonfair, and they're also targeting the wealth management market through financial advisors, broker networks, and of course the big private banks like Lombard ODA and UBS.
Thanks, Niall. And continuing on from that, then, are there any prohibited investments or restrictions on the types of assets that an ELTIF can invest in, particularly notable for private credit strategies?
Yeah, I mean, there is a set of prohibited activities that an ELTIF can't engage in. So they include investing in derivatives, say that investment in derivatives is permitted for the purpose of hedging the risks arising from the investments of the ELTIF. There are also short selling is prohibited, so an ELTIF can't engage in short selling. An ELTIF can't hold commodities, it's also prohibited from entering into securities lending, securities borrowing, repo and reverse repo transactions if any of those transactions impact more than 10% of the capital of the ELTIF. Then there, I suppose, in terms of the portfolio composition rules, there are diversification requirements that apply. But again, as I said earlier, there is a certain amount of, I suppose, recognition of the fact that professional investors are typically more sophisticated, more educated, and so a lot of the portfolio diversification rules don't apply to ELTIFs that are only marketed to professional investors. I suppose just to give you, I suppose the key portfolio composition rule really is that 55% of an ELTIF's capital must be invested in what are called in the regulation ELTIF eligible assets. So ELTIF eligible assets typically comprise equity and debt issued by listed and non-listed businesses. It also includes green bonds, property, infrastructure, simple securitizations, as well as any indirect investment in those assets, those eligible or those ELTIF eligible assets through another investment fund. So at least 55% has to be invested in ELTIF eligible assets, and then the 0 to 45% has to be held in assets that are eligible for investment by UCITS. So UCITS is the flagship retail fund in the EU, and UCITS eligible assets, as they're known, are typically highly liquid. So they'd include ETFs, listed securities, or listed equities, sorry, and highly traded corporate and government debt. So that's your very basic portfolio composition rules that apply regardless of whether an ELTIF is a professional investor ELTIF or a retail investor ELTIF. There are further rules that apply then where for a retail investor ELTIF, and I suppose the key being what's called the 20% limit. So that 20% is that an ELTIF can't invest more than 20% of its capital in securities issued by any one issuer, loans granted to any particular qualifying portfolio undertaking. A retail investor ELTIF can't invest more than 20% of its capital in real assets. So in other words, in infrastructure or in a single property asset. And it can't invest more than 20% of its capital in the units or shares of a single fund. So again, that's the key portfolio composition and diversification rules that apply for ELTIFs.
Thanks, Niall. That's really helpful. And then a final question from me: can the ELTIFs be freely marketed within the EU?
Yeah, so I suppose that's really another point that makes the ELTIF highly marketable is the fact that it has a passport which can be used which can be relied on to market the ELTIF to investors in every single EU jurisdiction. And availing of the passport is very straightforward. It's really just a notification to the home regulator of the ELTIF, and then marketing can begin. Of course, also important to note that pre-marketing of an ELTIF is possible, and that's really, I guess, pre-marketing is where you would go out to investors about an investment strategy, not mention a particular fund, and the fund may not even have been established and typically wouldn't be. But you go to investors to talk about your strategy, to gauge interest, and then if there's sufficient investor interest, then you'd go ahead and establish your ELTIF. I guess one point to note is that it is possible for particular competent authorities in EU jurisdictions to what's called gold plate the ELTIF marketing passport. So in other words, to add conditions. And France and Italy have taken that opportunity to essentially to add those conditions or gold plate the passport, but the conditions aren't onerous, and they're really just to do with the I suppose particular jurisdiction and marketing to investors in that jurisdiction.
Great, thank you.
Yes, Niall, thank you so much for putting together all this wonderful information for us today. We really appreciate it and taking time to answer our questions as well. For any of the attendees, we'd like to thank you for joining us. I have shared here on the screen our contact information. It's got both our phone numbers, emails, our LinkedIn. Please feel free to connect with us. We'd love to hear from you. And Niall, is there anything you'd like to add before we sign off?
No, I think we've covered all of the key topics there, and I suppose it'll be interesting now to see if the and it certainly appears to be the case from the ELTIFs that are being set up most recently, It will be interesting to see the extent to which retail investors in the EU, I suppose, take on board the ELTIF. And I mean, it's really key for the growth of the EU economy to unlock investment from retail investors, because there's so much capital there. It's something that the European Commission in particular has really put its shoulder to the wheel in terms of supporting the ELTIF and making it as marketable as possible.
That sounds good. A lot of advantages. Well, thank you so much, everyone, for attending, and it was a pleasure to have you on this session today. We look forward to connecting with you, and enjoy the rest of your day.
Thanks, Hope.